Hello guys, welcome to the Trading Parrot. We are about to have 3 out of 4 of the most impressive weekly breakouts. We are talking about the largest moves in whole history of Bitcoin are about to get confirmed tonight, Sunday. And if it gets confirmed, you're really going to regret to have looked the other way on the most important time of the past full year. Guys, if you like this type of content, make sure that you are subscribed to the channel. Hit the notification bell so you get notified every time I put out one of these videos. And I have a question for you guys. And guys, do you think we can hit 100 likes tonight? And leave me a comment down below if you think the breakouts I'm going to review in this video are really a big deal, or you think that we should be ignoring them. Let's get started with the daily time frame. Over the weekend, the price action has been pretty flat, especially considering that on Friday we have such a large candle right into resistance. Now, the good thing that we are seeing here is that throughout these 2 days, we are just sticking right below that resistance, not going anywhere. It seems that so far until the time I'm recording the video, the price doesn't want to take the fair value gap here at the lower end. Let's remember that we were saying in the video yesterday that the CME gap closed at 63.9 and that if over the weekend we go and we take that fair value gap up until 61.5, this will act as an insurance because it will give us a high certainty that the price later over the week will have to come back and close the gap. But let's not assume that this is how we are going to close the weekend. There's still many hours left for the price to decide whether the right thing to do is to go and take the fair value gap or just to stay there and maybe on Monday when CME has already opened, then come and take the 61.3. And careful, because here I'm making a big assumption that we will go and take this. And trading is all about uncertainties. There is nothing guaranteed. When I mention the 61.3, I talk about it as something that is likely, not guaranteed. So if in your mind you are sitting on your hands and you are looking for an entry bullish and you're waiting for that 61.3 because you want a cheaper price, it could happen that you miss the train because maybe the price doesn't come to this fair value gap for a long time. A fair value gap is only increasing the chances with some motivation for the price to come here, but it doesn't guarantee it. Looking at our support on the daily RSI, we don't necessarily need to come to this level to test the support at 51. We could come as well to the dotted yellow trend line at 54.55. And less likely, but we could have just done a fake out and break below both trend lines and then come still for levels that we are not expecting. Of course, that is less likely. We're talking about maybe 3-5% chances of that happening, but that's still something on the table. In fact, in the order book, you can still see the orders at 47 to 46. That means that some people think that is still doable. The people from 38 to 40K are all gone, sure, but these people here are still with some hope. And one new development is that over the weekend, we have seen in these past 2 days a decent spike in the deposits. Nothing compared to the amount of deposits that we saw in all this area in here from June to the end of July. But there must be some people thinking, okay, this is my exit, I'm done with this. And remember that this indicator is tracking big whales. So these are not just deposits from me and you, but from actual large holders. You could also think about it as a retest. As long as this doesn't break above and we start putting new highs in terms of deposit, we shouldn't care that much at this point, and we should be looking for potentially a new drop in this tendency where we see more withdrawals than deposits. And if we were to close the week with a megaphone pattern like this will be a dream come true. Think about this. In this area, we have a green candle. It wasn't even engulfing the large red candle in here. We just closed below the bull market support band, and then the week after we managed to cross above it and to get to the top of the range. That was too fast and we saw a rejection. If we were to close the weekly right above the bull market support band, that will tell a lot of people that missed the train, all right, I'm done, I'm just going to execute my limit order as a market order. Whatever happens, I'm fine. And why? because this green candle is much more bullish than this green candle that is of a similar proportion, but the placement is different. Because this one is straight away from the bottom closing above it, whereas this one is closing below it. And still, right after that, we managed to cross it. And since today is Sunday, still early, it's 4 p.m. here in the UK, we still have 8 hours to close the weekly candle. And here we are precisely the resistance on the RSI. The things that are bullish are higher lows on the RSI and a potential confirmation later tonight of this stochastic RSI bullish crossover, which is not just the typical one like we saw in here, but is 3 consecutive ones, meaning that there must be a lot of accumulation of energy in this whole process of so many months for eventually exploring what happens at the other end of the oscillator. And I'm gonna tell you one time, don't forget to watch the video yesterday. The Told You Short Squeeze is packed with information that is a must watch for the shift that we are currently having in the market. It really complements with this video to give you the overall picture. In today's video, we are focusing a little bit more on the weekly and the longer time frames, but the video from yesterday tells you what comes next in the shorter term as well. And I'm really happy with the amount of likes that we have had in the video yesterday. 123 likes is fantastic. Do you think in today's video we can get to 100 likes? That will be amazing. And I'm hoping that I'm not going to need ever to put any of these faces in the thumbnails to grab your attention so you watch the videos. And let's look at the liquidations on Trading Different. Some people are asking me if this is as good as Bookmap. I have 2 videos, one doing a review of Bookmap and another one reviewing Trading Different. And if you notice, I'm using on a daily basis Trading Different. I think Bookmap is a magnificent piece of software, but it's also a beast. It takes a lot of resources when I run it in my computer. It gives me a lot more information. You can use Bookmap with tons of different coins. Watch this video where I cover Bookmap, and this one I recorded 1 month ago where I cover Trading Different. Particularly in the one in Trading Different, you're gonna find in the description a very good deal to get some discounts as well. So yeah guys, we have done 2 out of 3 liquidations, and I really don't know why the price still hasn't gone beyond the 65k to grab the 67, because it's just so close to the price. Of course, there's very little volume over the weekend. Maybe the market maker might be preparing a trap for all the longs that may be right now opening positions in this flat area, thinking that it's gonna go higher. It looks like a bullish flag. It could go to 67, but maybe right on Monday when the CME opens, they might move the price down to close the fair value gap, causing all these longs that are expecting that the price is just gonna continue on a straight line up to 67 and beyond, getting punished. Looking at the 5-minute on Trading Different, we can find something quite interesting. We know that there is liquidity to the upside. There is this remaining bit above 65, but below the price we have 63.1, then 62 and 61.8. Those are the levels that are overlapping with the fair value gap, and is the motivation for the price to come here. Not guaranteed once again, but if we come all the way to those levels, you know why we're going there. That's the spirit. And over the weekend, we have reduced the amount of funding fees, interestingly. On the delta high block capital, we still see that the longs are the ones that are more exposed to getting liquidated. And here is going to be the star of the show. If you manage to watch the video up until here, you're getting into the get lucky area of the video, because I'm gonna show you alpha that you're not gonna find anywhere else. I really appreciate if you hit the like and we get to those 100 likes. Here you have BTC spread ratio, call it however you want, against the VIX, the volatility on the S&P. And you can see on the RSI here on the lower end, every time that we have a breakout, I have flag the breakout at the moment it occurs. This is on a weekly chart, and every time it happens, we have an explosive move to the upside. One in 2018, one in 2020, one in 2022, 2023, and now in 2024, we are seeing a breakout. This time is from an RSI of 48. In the past, it has been from 43, from 43, from 52 and from 40. So that is kind of the area in between 50 and 30 where you see those breakouts happening. And we are right now, Sunday, today. If we close this candle like this is a breakout confirmed, assuming that the price doesn't dump enough before the close of Sunday to push us back below the trend line, becoming resistance once again. So let's start counting. We have a potential confirmation of a breakout against the volatility index, 1. Now, let's look now at the spread against the liabilities of the Federal Reserve. Why on earth am I comparing with that? Because Bitcoin tends also to follow what the Fed is doing, which tends to magnify certain areas. And once again, we look at the RSI, the areas where we have had breakouts. We have in the previous bull market this full area of accumulation that lasted 728 days, a multi-year accumulation that exploded right at the bottom of the bear market. The best price and the best time to buy in the past 4 years. And all of that came from this breakout. Then we have kind of halfway through the bull market, another breakout on 9th of October of 2023. Then we have 185%. We know that by heart. And then this weekend, today, you're watching this video and you are seeing it once again breaking out against the Fed. So let's count. We have 2 breakouts so far against an important different asset. The next spread that we're going to be looking is the Nasdaq. And I'm afraid that against the Nasdaq, we still don't have a breakout, but we are right below the resistance. And I'm sure if the other 2 continue in that breakout, are going to pull this one higher, and we could see the Nasdaq doing the same. But if the VIX and the RESBAL were to reject the breakout before the close of today, then of course the Nasdaq is also going to see a rejection. So we have 2 out of 3 so far, and now we're going to proceed with the last one. This ratio is against the dollar index, and it might be the most important among the 4 that I'm presenting tonight. And you can see that in this particular spread, the price doesn't not just look extremely bullish to do a liquidity grab below the range and then come back in, candle of indecision, and then a jaw-dropping candle straight into the resistance at the trend line. We're just so close to it. And if we were to close once again on Sunday like this, we will have 3 out of 4 breakouts against the most important assets that can give us the best insights on what's going on with Bitcoin. This is not a joke. If we see this breakout on these charts, it could get really crazy in terms of price action to come. And since we're talking about long term, let's address the elephant in the room, which is the stochastic RSI on the monthly. And if you're not watching my channel and you're new, I welcome you, and I'm gonna give you just a very quick overview. I know the people that watch the channel for a long time have heard the story too many times, so I'm going to try to make it very concise. In a bull market, we tend to stay on the stochastic RSI monthly at the top of the range. That is the expectation. We are allowed to enter this middle range in there, but we are not allowed in a bull market to break below 20. If we break below 20, there's no questions that the bull market is completed. It's the end. You can see, for example, in this area, we managed to get to 35 and still survive it. We stay in the bull market up until we got to 65. On the second top, we made a higher high to 69K, and we did that while being at a 25. And that's the difference. Once you cross that 20, that happened in that candle in here at 36K, that's the end of the bull market. And all we were able to expect at that point was a dead cat bounce to 48, which happened already below 20. Below 20, all you can expect, dead cat bounce, is the end. And where are we right now? We are in this area here. This is the area of the anxiety because we are pending from a threat. Things can go very quickly below the 30 and then it's the end. Or we could fake out all we needed is to touch the 20, then bounce to 25, and you get a new all-time high. As simple as that. But if you go into the 20s, it's the end. And this month, obviously, we have slowed down or moved to the downside. When we were at 49, the stochastic RSI was very aggressively showing in this area here. And once we got bought up, and now we are at 64K, stochastic RSI during the month reversed back into 60s. And if we compare 60s to this or to some areas like where we were here at 46, we have done worse. There has been a lot more downside within bull markets in the past and still surviving and staying within a bull market. So what we are looking for right now is anywhere in here, a bounce down and then a recovery. We're going to continue monitoring the stochastic RSI on the monthly, just like all the other indicators. I keep all my tabs saved and I have alerts for everything and anything that changes, anything that is substantial and that might impact heavily where are we going, how high, how fast. I'm going to share it on Twitter with all of you guys. My handle is Trading Parrot, so make sure that you're following me. And thanks so much to all the people that voted for the videos. I know that in YouTube there was a preference for an altcoin video. On Twitter there was a preference for a BTC video. Don't worry, I'm still gonna make an altcoin video tomorrow. And for tomorrow's picks are gonna come from this tweet that I'm writing right now. So make sure that you comment on the tweet the coins that you want me to review. And there will be a preference for people that not only comment with their coin choices, but also like and share the same tweet. Guys, I'm hosting a position airdrop. You trade with $100 and they give you additional $500 for free to trade. There's a link at the top of the description of this video that you need to click to activate and see the instructions. I also left you a link to open an account using my referral that allows you to unlock up to 30,000 in rewards. And as I mentioned yesterday, if you open the account with my referral, now you don't have to pay the Trading Parrot subscriptions. All you have to do is open an account on the website, follow the instructions we left on my Discord server, make sure that you meet the requirements. They're very easy to meet, and then you get access not just to hundreds of different trading indicators for free. And if you love trading with bots, you're gonna get access to per selection, signals, orchestrators, and exclusive access to a VIP community of bot masters. If you don't want to use your Bybit account, that's not a problem. Yesterday we reduced the price of server 25% and the VIPs also 33%. That's all thanks to you helping this channel to grow like it's been doing in the past months. My dream is eventually to give all this value for free and to change people's lives as a way to pay back. Thank you so much. I'll see you on the next one. Bye bye.